Hey traders, welcome to our first multiple time frame strategy tutorial. So during this tutorial, we're going to go through a strategy we're going to use multiple time frames in order to take advantage of, which means we're going to be swapping from daily charts to 4-hour charts specifically for this strategy. We'll be taking a look at a few different strategies like this throughout the advanced section of the course, but today is going to be our first strategy using multiple time frames. This strategy is called the aggressive entry. With the aggressive entry, we're taking advantage of some very prominent levels of structure in the market and using a specific entry in order to take advantage of these really accurate and prominent levels. If you've seen some of our YouTube content, we come out with videos each week talking about levels of structure, and that's exactly how we spot out levels of structure, guys. What I'm going to do is draw that on the chart for you. So the first thing we're going to look at is condition number 1 for these strategies. And before we get started, something important to note is that these are advanced strategies, guys. Making these strategies completely objective is going to be nearly impossible. We're all going to see different levels of structure in the market based on your own eyes, based on what you've experienced in the market yourself. These are going to be a lot harder when it comes to testing these strategies and actually implementing them into the market. But guys, we're in the advanced section. At this point, you should have already been through the transition course and you should be ready to take on the task of learning these advanced strategies. So if you're ready, then let's go ahead and get started. So for our first multiple time frame strategy, the aggressive entry, one of the first things we're going to take a look at is conditions. The conditions for this strategy is going to be a daily chart structure analysis. For the daily chart structure analysis we do each and every time before we place this trade, what we need to see is a level of structure out on the daily chart that's been tested multiple times. So what we're going to do is we're going to pretend this chart right here is a daily chart. An example of a level of structure that's been tested multiple times, it's pretty self-explanatory, guys, is right here. The reason that's a level of structure that's been tested multiple times is because it's a level of structure that's been tested multiple times, right? We have a resistance here and support here. The market has used this level as support, used this level as resistance. What we need to see is the market doing that 2 times, okay? Once we have that level spotted, we're going to place a horizontal line directly at that level, somewhere in between the candlestick bodies and the candlestick wicks. Now that we have that level pointed out, what we're waiting on next for condition 1 to be met is the market to be at that level. The market has to be around that level. At currently, this level we're looking at is around 1.5674. So on the pound dollar, we would need the market to be at 1.5674 or at least close to that area. Now again, it's going to be almost impossible to make this completely objective. So I don't necessarily have rules for my structure zones. I'm looking at this zone right here around the 1.5674 level. And just because of my experience, I can tell when the market's likely to go above it and when the market's likely to use it as a level of resistance or support. That's something you'll get better at with experience as well. But what we need to see is the market get to that zone. And once we're here, guys, we're going to use a pattern that we've already been discussing. One of the patterns that we're going to use is the entry number 1 for the pullback strategy. Our advanced engulfing entries are what we're using here at these levels. So let's go ahead and draw one of those out. So let's say we get to this level and we have a green candle coming up to the level. This green candle right here, let's go ahead and put some wicks on it as well, is followed by, let's say, our first entry, which is that 1, 2, 3 engulfing move. So we have a green candle there, we have a green candle here, put a couple wicks on this as well. We'll just put a top wick on this one, and then we would have a red candle, right, for that advanced engulfing entry number 1. So here's our red candle, and that would be advanced engulfing entry number 1 for our aggressive entry. Remember the condition, we're waiting on the market to be at a level of structure that's been tested multiple times by price action. Then we're waiting on our advanced entry reason that we use with engulfing candles, which is that 1, 2, 3 entry or the swing high engulfing entry. Either one is fine, but one of the conditions that we're going to use, another condition we're going to use for this specific strategy, is that our advanced engulfing entry must close below the low of the previous candle, and I mean the low of the wick. So originally we were waiting on this to happen, but we wanted just the engulfing of the body of that previous candle, right? We just wanted to engulf the body of the previous candle. Well, in this case, for the aggressive entry, we need this engulfing candle to close below the low of the previous candle for a shorting scenario. For a long scenario, of course, it would be the opposite of that. We'd want the close of a green candle to be above the high of a red candle. So the only difference in the entry reason is that we need a close below or above the low or high, depending on if the trade is bearish or bullish. So with that being the case, let me show you guys a scenario that would not be an aggressive entry based on the strategy we're talking about right now. If we had this, originally for the pullback strategy, this right here would be entry number 1 because we have a engulfing bar based on the body of the candle. But for the aggressive entry, our entry number 1 has to close below the low of that previous candle or close above the high for a bullish example, which is something else we'll go over a little later on in the video. But that's entry reason number 1. Now, in order to show you guys entry reason number 2, I'm not going to draw anything new. I'm just going to go ahead and put a wick on this candle because all we look for entry reason number 2, remember, is a swing high advanced engulfing candle, and the same exact rules apply to that. We just need this to be a swing high candle, and we need that low, the body of this engulfing candle, to close below the low of the previous candle for a bearish example. It's exactly what we get here, and we are in fact meeting the condition of being at a level of structure that has previously acted as support and resistance multiple times in the past. As long as we have all those rules met, guys, this is in fact an accurate aggressive entry. So that's what we're going to be looking for. Again, we're just swapping time frames here. We're going to be looking at this part on a daily time frame. We're looking for this resistance and support, multiple level of structure tested. Our candlestick pattern right here is going to be on a 4-hour time frame. So that's what we're looking for the aggressive entry here, daily, here, 4-hour time frame, looking for this advanced engulfing move that closes below or above the previous candle. Again, that close above and below is extremely important. We need that to increase the accuracy of this aggressive entry. Now, you can trade it as regular advanced engulfing candles, but that is going to decrease the accuracy, guys. It's not that it's not profitable. This just increases the accuracy a little bit for these aggressive entries. So hopefully you're able to understand that pretty clearly. I'm going to delete everything on the chart. I'll go ahead and go through a bullish example with you guys as well, and then we'll take a look at the chart. We'll take a look at a few live examples of this on candlestick charts. I'll also go ahead and go through a little bit of back testing of this strategy with you guys so that you can have a better handle on it. But essentially, this is how we're going to be trading the aggressive entry. Let's go ahead and flip the chart around, take a look at a bullish example, and then we'll continue down to some actual live charts. Okay, traders, so now we're taking a look at a bullish example of the aggressive entry. Again, let's look and see if our condition is met. Remember, this part of it is going to be on the daily chart. This part, just our candles here, we're talking about on a 4-hour time frame. So for our daily chart analysis, what is our condition that needs to be met? We need a level of structure that's been tested multiple times as support or resistance, or both. This, in fact, has been tested once and twice as support and resistance. Now, we're waiting on the market on the daily chart to get back down to that level. In this case, we're looking at 1.5662. When we get to that level, we're using our advanced engulfing candlestick entries with one extra condition. That one extra condition being that we need the close of our advanced engulfing entry to be above the high of our previous candlestick for bullish entries. So hopefully that was pretty easy. We've already looked at some bearish examples of this. I'm not going to spend too much longer on this, guys, and then we're going to go down to some live charts and take a look. But for the swing low engulfing candle, our advanced engulfing entry reason with the swing low engulfing, this is what that would look like. Again, we would have a swing low that was a bullish engulfing candle, and the extra added condition is that this swing low engulfing candle actually closes above this previous level, above this previous high of that previous 4-hour candle. So that's what we'll be looking for bullish entry reasons. Again, looking at this multiple tested level of structure on the daily chart, finding it, placing our horizontal line, and then finding these advanced engulfing entries with that one extra condition on a lower time frame. For instance, in this case, we're looking at it on a 4-hour time frame for the aggressive entry. So that's a bullish example of our strategy called the aggressive entry. We're going to go ahead and move on now to actually looking at this on some live charts. Let's go ahead and move down to some live charts and take a look at this strategy. Okay, guys, so here we are on a daily chart of the pound dollar, and just to give you guys an idea of what we're looking for that condition, that multiple tested level of structure, I'm going to go ahead and show you guys the levels of structure that stand out to me on this chart based on that condition we've just created, the multiple tested levels. So the way I do that, I always put 2 below where price is right now and 2 above where price is right now. So we mark where price is right now, and now what I need to do is find a level of structure above and below that that's been tested multiple times. And for this example, this level that we just pointed out with our red line where price action is right now on the pound dollar would qualify as a multiple tested level of structure. We have support, resistance, resistance, resistance here at this level. So this would be one of those zones, one of those levels where we would be taking a look for that advanced engulfing entry that closes above the previous candle with that extra condition. So there's a level of support pointed out. Now we're going to point out another level of support based on multiple levels of structure tested, which would be right in there. Again, guys, the reason for that, we're looking at support, resistance, support, support. That's going to be another level we pay attention to around 1.2409. And this is in real time, guys. These are the levels that I'm going to be paying attention to for the aggressive entry strategy moving forward. So this is a level of support I'm looking at is 1.2409 here on the pound dollar. Now, I know you may be thinking that this seems very subjective, and guys, it is. It really depends on how you see these levels of structure. I have spent years pointing out these levels. That helps me to understand where they're going to be, but there's no really specific rules that I use other than needing that level to be tested more than once. So this is something, again, that you'll get better at with experience. And what we'll do now is point out our two levels of resistance above price action. Price action's right here at our red line. What's some levels above that we can look for possible resistance? Well, this level right in here stands out to me. The reason it does, if we look back in the past, we have this level acting as support, support, support in through here, support, and support. So a few times there, the market used this level as support for the pound dollar, and that's a level that we'll be looking at for resistance. An example of using the aggressive entry would be sitting here now. This is a live example, guys. This is something we're actually looking for, is if this market finds some support out of the level we're at right now and gets back up to 1.2868, the level we just pointed out looking left on our charts. This is a level we'll be looking for that advanced engulfing entry reason at. So if we get something like this on a lower time frame, maybe this candle's red, and we have that swing high engulfing candle that closes below the low of our previous candle, then we'll be looking to take a trade based on that. So that's going to be one of the ways we look to take a trade based on the aggressive entry here on the pound dollar. That's an example of what we're looking for. Now the next level, I said we do two below and two above price action. So the next level I'm going to be taking a look at above price action is right here. Again, same reason, guys. We're looking at levels in the market that have been tested multiple times. Support, 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 support. We get a big move up here to this level. That'll be a great place to start looking for some possible shorting opportunities around 1.3048 on the pound dollar using our advanced engulfing entries with that extra condition of needing that engulfing entry to close below our previous candle, because in this case it would be a shorting entry right at that level. Now guys, we're going to take a look at a few other trading strategies using this method of finding structure based around the other entry reasons that we've discussed here in the advanced section. But if I try to do all of that in this video, it will get extremely long. So what we're going to do is just focus on the aggressive entry for now. So now that we've actually taken a look at exactly what we're looking for here on the daily chart, what I'm going to do is take you guys down to a 4-hour chart, and we'll discuss the actual entry, the advanced engulfing entry that we're using, plus putting in that extra condition. We can take a look at an example of a couple of those candles so there's no confusion at all there. And guys, also, if you want to make this less confusing on your charts, I would suggest changing your support lines to a certain color and your resistance lines to a certain color. Personally, I do red and blue. I do blue for my support lines and red for my resistance lines. So let's go ahead and drop down now. Actually, we don't have to drop down. I have a separate chart open that's a 4-hour chart. We'll take a look at where price action is now and see if we can point out any of those candles we were talking about just a second ago. Here would be one. So I don't know if this is actually the case. There could be a level of structure looking left here, but if, let's say, this was a daily level of resistance, let's say this met our rules for our condition and the market got up to this level and put in this exact candlestick formation. We have our 1, 2, 3 engulfing move, and our third candle in fact closes below the low of its previous candle. That being the case, this would be a valid aggressive entry strategy. So that's the rules we're looking for when it comes to the candlestick pattern. We'll take a look at one more of these. We'll just go bullish on this next example, which I already see. Again, let's pretend that there's a level of structure looking left right here from the daily chart, and then we get this swing low, engulfing green candle, and the engulfing candle closes above the previous candle. All of that being the case, then that would make for a valid aggressive entry. So there's the candlestick pattern we're looking for. There is the things we're looking for out on a daily chart. Now what we need to discuss is stops and targets. And guys, for this specific strategy for the aggressive entry, we're using the same exact stops and targets that we talked about for the pullback strategy. And we're also using 2 positions. Personally, I'm using 2 positions. If you just want to use one, that's completely up to you. But I'm using 2 positions because we can have possible reversing situations out of a market with this being the case. But anyway, besides that, we're looking at stops that are going to be if the market is below 30. Again, you should already have this written down. If you don't, then make sure to write it down. You should already know all of this information if you've been through the transition course, but we will do a quick recap of stops and targets. If the ATR of your 4-hour chart, we're basing the stop loss on a 4-hour ATR. If the ATR is below 30, then it's a 20 pip stop loss below the swing low or above the swing high, depending on if the trade is bearish or bullish. If you have an ATR that is above 30 or above is going to be a 30 pip stop loss up to 49. 50 and above is going to be a 50 pip stop loss up to 99. 100 and above is going to be 100 pip stop loss below that swing low or above that swing high, depending if it's a bearish or bullish trade. So that's the stop loss. Again, targets are the same as with a pullback strategy trade as well. We're looking at a 1-to-1 risk reward on first targets, and we'll use some of those multiple target techniques in order to trail the position down. So that stops and targets on the aggressive entry. Next up, we'll actually look at how to backtest this specific entry. That's something that can be very difficult, guys. And again, this is an advanced strategy. It's going to be difficult to backtest. It's going to be difficult to implement in the markets. And it's going to be difficult to make objective, but it can be very accurate. We're way past the period in your trading where you should have to have completely non-subjective everything, because at this point you should be a little more advanced. You should already be profitable using the transition course. If you're not, I would highly suggest going back through that portion of the course. But for now, if you're here, then I'm trusting that you have already done all of that. And what we're going to do is go ahead and take a look at the pound dollar. We're going to delete all of this. We're going to go to all of 2018, and we're actually going to test this strategy together throughout 2018. So what I'll do is put a horizontal line right on the beginning of 2018. There we go. We'll move our 4-hour chart there. And guys, if you're wondering how I got my chart like this, there's a little button on TradingView. If you're not using TradingView to backtest, then I really don't know how to tell you to do this. So you'll have to look it up on your own platform. But if you're using TradingView, this button right here beside your chart, this chart's unnamed, but whatever the name of your chart is, the button to the left of that is a layout. You can select different layouts for your charts. You can do 3, 4, up to I think 8 charts on one screen. What I do is the double. I do 2 on one, and this is just for the purpose of backtesting. So having these 2 on here makes it extremely easy to sit here and go daily chart up to 4-hour chart, daily chart up to 4-hour chart. And with the daily chart, I'll go ahead and make that full screen. We have our horizontal line on the beginning of 2018. The significance of that is that we're going to pretend the market is right there at the beginning of January. We're going to pretend that we can't see any data past that. All of this is not there, is what we're going to imagine. And what we're going to do is point out levels based on the market being right here. So how are we going to do that? Well, go ahead and see if you can spot a couple of the levels while I point them out for myself. Doing this, you'll either use a horizontal line or a horizontal ray tool. Okay, and guys, for me, a standalone level, which would be right here, does count as a resistance level. What do I mean by standalone? Well, as you can see, this level right here has made it past all other resistance levels and then used as possible major resistance. Because of that, and again, I need it to be used as possible major resistance before considering it this kind of level, this standalone level. It's also been used in this period of consolidation right here. All those factors make this a standalone major level of resistance for me. So that's the first level of resistance I'll be pointing out, is right there. We're going to use the same rules we just did, which is we're going to use 2 or 3 levels above price action, which for us, price action is right there at the end of 2018. We're going to use 2 or 3 levels above for resistance, 2 or 3 levels below for support. This, guys, another standalone level. And then for my third level of resistance would be right there, because this level has acted as support so many times in through the past, right in here. For the pound dollar, this our standalone level for the same reason as this is. It's a level that the market broke through, created new support, and then used heavily as support. This level, market broke through resistance levels, created new resistance, and then used that level heavily as resistance. So those are our 3 resistance levels we're going to use. Next up, we need to point out our support levels. So what are we going to use as support? Let's go ahead and color our horizontal line blue. This level in through here is one of the major levels of support that stands out to me. The reason is because we have resistance, 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 and support. What I'm going to do is actually bring that line down just a little bit. And this is part of the subjectivity of this type of trading, guys. We're not going to have a line at the same exact spot more than likely. So you have to make these trades based on your eyes and your testing. And this is the way we're going to use to test this type of strategy. Now, see if you can spot out the next level of support that I'm looking at. For me, that level comes in right there. So the reason that's going to be a level, hopefully you've already spotted it, but is because we have a level that's been tested multiple times as support and resistance. These levels at our red and blue lines is exactly where we're going to be looking for our possible trades, guys. This is where we're going to be looking for those advanced engulfing entries with that extra condition of having to close above or below the previous candle's high or low. So that's our second level of support. We'll go ahead and make one more level of support to make testing a little bit easier. And let's see what we have. I would be looking right here, guys. This level is another level that's acted as support multiple times in the past. Pretty easy to see that. We have support, support. We have a little bit of support in through here, little resistance, support, and support. So with these lines, what I do is here we are at the beginning of January 18. We've placed all of our lines on our screen. With all of these lines on the screen, I test for 3 full months on the 4-hour chart, and then I back up to the daily chart again, and I look for more levels. I look to see if these levels still apply, or if there's been new levels made, or if I need to move my levels at all for any reason. So remember, we're going to spot these levels out, and then we're going to test for 3 months. This is just during the testing phase of this strategy. So spot the levels, test for 3 months, come back to the daily chart, redo the levels, then test for 3 months again, redo the levels, test for 3 months again, so on and so forth until you have an applicable amount of tested data. So for the pound dollar, what we can do now is actually head down to smaller time frame, our 4-hour chart. We're going to keep the market where it is. Remember, we want to be starting here and pretending that there's no more market data after this point in 2018. So we're starting at the beginning of 2018. We have all of our levels pointed out by our horizontal lines, and we're going to start testing like this. We're going to go ahead and move the chart slowly to the right. And guys, in case you did not know, we're doing nothing but looking at this portion of the screen. We're looking right here to the right edge, because we're moving the candlesticks one at a time to see if our entry reason gets met. Okay guys, so right here, let's zoom in on this candlestick. We're right at that level of daily structure we pointed out, right? We're right at that level that's been tested multiple times right here. Is this our advanced engulfing entry? Yes, we have a swing high engulfing candle. Is our extra condition met of that engulfing entry has to close below the low of this candle? Yes, that condition's met too. So guys, this would be our first valid engulfing entry, or a valid aggressive entry here on the pound dollar. So we'd go ahead and point that out with a green arrow, of course, or whatever you use to point it out on your back testing. For me, I either use a green arrow or green horizontal line. The green horizontal line will give you the time of the trade. If that's something you record in your back testing, then it's good to just use a green horizontal line. But there was our first win. And guys, we can use these levels as trend continuation or counter trend. What we're going to do is continue to look. And after this first win, guys, another thing to point out is if we get one win out of a level, I don't look for another trade unless I get a specific entry reason that we'll discuss later on in the advanced section. Right now, again, keeping it simple, plus trying to keep this video as short as possible, which is proving to be difficult. We're going to go ahead and just discuss the aggressive entry. So let's look and see if we get anything else. Nope, we break above that level now. So now that we've broken above that level, one thing we can say after breaking these major levels of structure is that if the market gets back to this level right here, we're going to use it as support. We're going to try to take advantage of a trade on this level, again based around our advanced engulfing entry right here, and use it as support for trend continuation. If we don't touch that level and use it as trend continuation to the upside, then the next place we're looking for a trade based on the aggressive entry is 1.3845. So let's go ahead and move the market over, check and see if and when we get that next entry. All right, right here, we do not get an advanced entry, plus it's not close enough to our zone. And again, these zones are going to be subjective, guys. There's no way to really tell you some exact rules, because I don't use exact rules for these zones. I use my experience. And if you're someone who has to have rules, I may do something like the line you point out. Go ahead and draw your line. Once you draw your line, make the zone 10 pips above and 10 pips below that line. That's your zone. You can do something like that. You can use 20 pips. You can go through your testing, and actually you'll have to figure out what best works for you during creating these zones. So let's continue looking here at the pound dollar. Now that candle there would in fact make it to the zone. For me, we do have an actual aggressive entry there with our candlestick formation. Unfortunately, looks as though this entry did not provide a winning trade. So we'll mark that as a loser. Continue looking. This level has pushed up way too far. We're not counting that as an entry, although that is a correct candlestick pattern. It's way too far above our zone. But remember what we were talking about, guys. We're waiting for this to happen, right? We're waiting for that market to get above that level right there, and then we're waiting for it to pull back to it, and we're using it as support then, right? Well, in this case, we didn't get any kind of advanced entry reason here, but if we would have, this would have been a very good example of using this level for trend continuation and not for counter trend, which is something we can also do. Let's continue moving forward now as we break above that level of resistance that we pointed out. So have we now broken above all of our resistance levels? Well, the answer to that is, of course, yes. At this point, we pointed out 3 resistance levels. They've all been broken above. It hasn't quite been 3 months yet, but what I know I have to do is go back out to my daily chart. So I'm going to go ahead and mark where we are with a horizontal line, vertical black line, and that's going to let me know that we are, in fact, at January the 24th. I can close down the 4-hour chart, open up the daily chart, scoot over to the January 24th black line, and at this point what I'm going to do is point out another couple of resistance levels just so that I know I'm safe when the market gets above that level. So let's go ahead and grab a horizontal line, make it red. What's the next resistance level that we have? I would say somewhere right in there. And the reason for that, guys, is because of the same things we've been taking a look at. We have support from this market right here and here. We have resistance all in through here, a little bit of support right here. So with that being the case, this would be my next level of resistance that I was looking at. We'll mark up one more level, which I would put right up here for obvious reasons, guys. We're not going to keep going through the reasons. It's because it's been tested multiple times as resistance in the past. So now we can go back down to our 4-hour time frame, and we can continue looking for trades on this time frame at this point because we have our levels of resistance marked up above price action. So on the 4-hour chart, continuing to look here, and there we have something to pay attention to, right? At this point, we've touched our 1.143 zone with a swing high engulfing candle. Is our extra condition met of closing below our previous candle? The answer to that is no, but we're closing so close to this low, guys, that I would probably use this as an entry. Again, this is a little bit subjective, and I know that, but if we get a close this low, that's almost at the bottom of that candle, then I can use that as an entry personally. And if you are someone who needs set in stone definable rules for your trading at all times, then don't use that as a rule, or maybe create a rule. It has to close within 5 to 10 pips of that previous candle. You can create rules like that for this type of trading strategy, but for me, this would be a valid swing high entry. Now, if we continue to look, you can see that that trade ended up playing out quite well. We'll place a green arrow there, and we'll continue to look based on our horizontal lines to see if we find any other trades. Now here we have a candlestick that did in fact almost engulf that previous one, but it doesn't look like that's actually engulfing candle, so we wouldn't be able to validate that as a trade, although we do have a swing low almost engulfing candle right at that level. If it was engulfing, this would be a valid trade right here for the aggressive entry, but it was not, so we can't count it. We'll continue moving forward now, and it looks as though we don't have much moving forward until, again, just continue to look, guys. And right here, guys, this is our next trade possibility. We have a swing high engulfing candle, which again is about 5 to 10 pips away from closing below this low. For me, I can count that as a valid trade. Again, you can throw that in your rule book if you want to, within 5 pips, within 10 pips. Test it to see for yourself which one works better for you. If you need it to be completely non-subjective, then don't use that rule. Just go ahead and wait for a candle that closes below that previous low. But in this case, for me, this would be a valid trade. Stop loss would be, the ATR of this candle is 59, so stop loss would be 50 pips above this previous candle, the swing high here. We'll go ahead and look at that. 50 pips, in fact, would have kept from being stopped out, and this trade ended up pushing down and hitting targets, so that would be a winning trade. And now we're continuing to look for possible trades around these zones. And if we push the market forward, here we have one right here. Again, not directly at the zone. It's not like it completely hit the level we had drawn out, but it is in the zone that we're looking at for possible support based on that multiple tested level of structure on the daily time frame. And this is in fact a swing low candle that closes above the previous candle with that added condition. So that would be a valid aggressive entry. Stop loss would go below the swing low, again by 50 pips. This market pushes up and hits what would have been targets. Now we're continuing to look for our trade. There we have another trade based around the aggressive entry because we're right at our previous level of structure, the one we've pointed out on a daily chart that's proven to act as support and resistance multiple times. And we get a 1, 2, 3 move with a close below the previous low of that candle. So that would be another valid aggressive entry. Go ahead and move the chart forward, see if that trade won or lost. Looks as though it was a winning trade. So guys, there's a few different examples, and I'll go ahead and mark these two with green arrows. I'm going to try to speed this video up a bit if I can, so I'm just going to go directly to the trades at this point and show you guys the winning and losing trades based around the strategy. Here we have a losing trade based around the aggressive entry. We have a market that's breaking above structure. We were looking at this as trend continuation. We have our 1, 2, 3 candle with a close above the previous wick of the previous candle, yet this market continued lower and ended up hitting what would have been our stop loss. We'll go ahead and put a red arrow there. Here we have a winning trend continuation play as the market pushed below that level of structure, came back up to it, and eventually put in that 1, 2, 3 aggressive entry right here. This candle closed right at that previous low, making it a valid trade for me and hitting what would have been targets right down here. Go ahead and put a green arrow there. Another little important note, guys, is that in between these levels, as you can see right here, we have a major level of resistance and a major level of support based on our daily time frame using that multiple time tested level of structure rule that we have. In between these levels is a great opportunity to look for trend continuation plays, guys. In between these levels, the pullback strategy, one of our favorite trend continuation plays, tends to work out really well. Right here you can see one win from the pullback strategy, a second win from the pullback strategy, a third win from the pullback strategy, pushing up into that daily level of structure. The reason this is so important and the reason this works out so well, guys, is because these levels of structure, they draw the market to them. So if we push above a daily level of structure, the market's going to be drawn to the next daily level of structure. That is so many arrows. Let me delete that. The market's going to be drawn to this next level. As it's drawn up, there is a great opportunity to start looking for trend continuation plays. That's something to consider and keep in mind. We'll go ahead and continue looking for the aggressive entry. All right, guys, so here we have another example of the trend continuation aggressive entry. The market pushing down here, pushing back up. As we push up, we get this 1, 2, 3 right here. And this engulfing candle definitely closes below the previous candle. So that makes this a valid aggressive entry. Again, we're right at that level of daily structure that we were looking at for possible trend continuation anyway. So with that being the case, this is a valid aggressive entry. And here, guys, we have another example of the aggressive entry trend continuation. What we have is a market that eventually reversed right here, right? We had this little reversal situation, and then the market pushes back up to that level of resistance we've talked about. We have a 1, 2, 3 engulfing candle closing below the previous candle, which gives us the appropriate aggressive entry, a valid trade based on the aggressive entry. Take a look at how this trade played out. Pretty good win there, so we'll go ahead and put a green arrow right there. All right, guys, so here we have an example of what would not have been an aggressive entry because this close, as I said, it needs to be about 5 to 10 pips away from that high. This close is about 15 to 20 pips away from that high, and this is what I'm talking about when I say we don't want to trade these types of candles. So this candle, it was a swing low engulfing candle based around the body of this candle, but didn't even come close to closing near the high of that previous candle, so I wouldn't be wanting to trade this specific entry. That would make for an invalid aggressive entry. And guys, here we are at the end of the market data. So let's go ahead and scroll the chart out, take a look at the wins and losses for this strategy. Here on the pound dollar, we had 2 losses, and we had 1, 2, 3, 4, 5, 6, 7, 8, 9 wins in 2018 with 2 losses. Pound dollar is one of my favorite pairs to trade the aggressive entry on. This is the pair I suggest you start your testing with. That's how you're going to end up back testing the aggressive entry, going through the markets again. We're looking at 3 months of data before we back up, take a look at daily charts and redo our levels. And then we look at 3 more months of data. We do that same thing, pointing out the levels exactly as we did here, using the exact entry reasons we talked about here. Go ahead and go through the markets, test the aggressive entry, see if it's something you want to put into your trading plan, see if it's something you think fits well in that trading plan for you. This can be a great addition to the pullback strategy, as a lot of these trades are going to be counter trend. So that will add a counter trend strategy to your trend continuation strategy, which can a lot of times help with drawdown. So hopefully you were able to get a lot of value out of this strategy if it's something that you want to use. and you have any questions about it, then all you have to do is email me at steven@thetradingchannel.net. Your priority email service will ensure that I get back to you as soon as possible with any answers to questions you have about the aggressive entry. Again, I understand that it's not the most non-subjective or the most objective strategy that we've talked about, but this is a very advanced strategy that can be extremely accurate that I'm very excited to share with you guys. So that's going to do it for the aggressive entry. Later on in the advanced course, we'll be talking about some other entries we can use with this multiple time frame technique that we just talked about. And I'm looking forward to sharing those videos with you as well. I'll see you guys in the next video.